Investors and traders, welcome to the channel. Market chart pattern today, 7th of July 2024. I hope everyone is having a great weekend. This video segment, we will be taking a look at the financial stocks for the United States market. We will take a look at the KRE, which is the regional banking ETF. We'll also take a look at the XLF, which is the ETF for the financials, but has bigger banking stocks. And also it's got Visa and MasterCard. Then we'll take a look at some of the individual big investment banks, how they are trading in the market now. Alright, so this video is for educational purposes only, and it is not a financial advice. With that, we'll start by taking a look at the weekly chart of KRE. KRE is the S&P regional banking ETF, and this is the weekly chart. So this basically has smaller banks, which are the regional banks, the Silicon Valley Bank, which went belly up last March, in March of 2023, around here. That was part of this index, but this index was already telling a story going way back in January of 2022. You can see that it was actually selling off for quite some time, and then the news began to break out into the market. So this is why it's really important to actually take a look at these regional banks, what they are trying to tell us. And here in the past, we had been actually watching for this level, which is around $46 per share level, and this is what the market has been respecting for a very long time now, since February of this year. So it's actually been in a trading range, but as per our pattern recognition, as long as this point is held, which is point C on closing basis, and it's the weekly chart, we could still have an ABCD, which could take us as high as 62. On the flip side, though, and also because we have this downward trend line here, which has been acting as a resistance for some time, but could also act as a support, like here, around here, on a retest. If we break below this 46, then we could be looking at further downside. For now, this market has been in a range-bound price action for quite some time, and whenever usually this kind of thing happens, the market will eventually break out in an explosive fashion on either side. We'll have to wait and see which side it will be, but thus far our level is being supported. Now here on the daily chart, here we go. We can see that last couple of trading days, the market is finding resistance from about 49.50, but it is still supported by the 20 period moving average, with the 200 period moving average just below that. So if the price was to move lower, and it begins to close below, especially 200 period moving average, that will be an early indication that we are likely to go and test this 45.60 level that we spoke about on the weekly chart. Now let's move on to the XLF. Here we go. So this is the weekly chart for XLF, and here it had been in a fantastic run since October of 2023, and then it seems to have found a high around the March of this year, and then it did a retest of that high, and it's just now back into the trading range. It still has the possibility to reach 43 shorter term, 44, and then possibly even that 45 level, which is the 1.272 expansion of this entire trading range that we see. So essentially that 2022 bear market. And one of the key things that we have been watching here is this level, 39.55. Although there is a possibility this market, if I were to correct further, could actually retest this 38.2% retracement coming in around 38.30. But the chances still remain that there is a possibility of a bigger ABCD as high as 49. But again, it all depends upon how the market will actually hold this key level of 38.30. As long as it remains above that, I think we might be able to hit some of these shorter term targets and possibly even 45. So we'll take one thing at a time for XLF, and then if we just move to the daily chart, and here we go. I think the daily chart, yeah, now it's not in the log scale. So here we go, and here what we can see is we have these number of smaller ABCD in blue and black also completing around the levels which are indicated on the weekly chart. So yeah, really for the blue cycle, the price really needs to hold, and also for the black one as well, above this 40.66 on closing basis. Now it did make a slightly lower low, on an absolute low, but it pretty much closed on these occasions at or above this. So I think we can give it a benefit of a doubt, without having to actually come up with a new point C. And it looks like it is, yeah, it's for sure a range bound market, but we could have another ABCD if these highs are taken out even by 1 cent. We could have a possibility of a smaller ABCD like this, and here we go. So it will just take us right towards the top of the trading range. So essentially it's a range bound price action which has been going on for quite some time now. We do have, as long as this point C is held, some higher targets, which also line up with the weekly chart as well. So this is what we are watching in the XLF ETF. And now we'll take a look at some of the individual banking stocks. So we'll start by taking a look at Goldman Sachs. This is the weekly chart, and what we see is a range bound market, because Goldman Sachs hit our target. So we were watching for this 1.272 expansion and possibly the 1.618 extension of this black cycle. So actually I'm gonna move it like this, so it's easier to see. Here we go. Because we have a confluence of two of these coming together with 1.272 expansion and the 1.618 extension. This was a target for us, but it could also act as a form of resistance, and the market would actually rotate lower, which in fact it did. And when it did that, the concept of market symmetry is there. This is what we had seen previously, this market correct buy, and it has already done that. Now if the market is likely to move lower, if it moves lower than 439, then what it indicates is that we are going in a deeper correction, and then we could in fact look at $400 per share level, which will be 38.2% retracement, and which is a perfectly normal kind of retracement. And we have some structural support come around 420 as well, so that could also be a potential support area along with this 20 period moving average. If we were to look at the daily chart, here we go, and here we go on the daily chart. What we see is, here you can just see the sideways trading range price action more clearly. So the market is just in this kind of range of about roughly $30 per share level, and it's supported by the moving averages. Look where the 200 period moving averages and 89 period moving averages above the 200 period moving average, and then we have the 20-day moving average, and the price is above that as well. But the price is actually range bound. It's more likely to test the lower end of the range, then move up a little bit, maybe come down to 89 period moving average, and eventually these moving averages will begin to catch up with the price action. The other way is that maybe there could be a sharper move lower, and basically the price catches up with its mean, which is rising as the market consolidates around here. And now let's take a look at the stock of JP Morgan. There we go. This is the weekly chart of JP Morgan. It is also acting as expected, because we were looking at this 216 as a kind of a target and a potentially strong resistance level as well. So the market came pretty close to that, about 210. So only $6 away on a $200+ dollar stock. One thing about this stock is, if you look at this trend line going back to 2009, really strong solid trend is in place for this stock. However, in my opinion, the stock is also reaching the kind of levels where we could see some distribution coming in this stock. At the moment, I don't see much sign of distribution. The distribution would look like something like this. And what we do have here, though, is is a potential pattern, 3 drives to a top pattern. Let me try to draw it for you. And let's say if there was gonna be a smaller ABCD, this is going to take us right into this region which we have already highlighted. In terms of symmetry, if we were to draw it like this, and I am going to draw some expansions. So 1.618, 1.272, it's already there, but the chances are it's likely to move into the 1.618. And then if we were to look at this expansion, here we go. When this top came in, it was almost 1.272 of this one. So to highlight it like this, and this is a weekly chart, right? So it's a slightly longer term. We have a potential pattern which could look like this with a pretty good amount of symmetry in it. Here we go. And it will be a 3 drives to a top pattern. Now, if I were to show you, there was when this market was making kind of similar kind of pattern, but not exactly the same. It was around here. Let me grab this. You can see that a very nice ABCD here. We do have a potential ABCD. The market is not there yet. Then it had a high here, and it made an expansion. Let me try to draw an expansion here. And you can see that it was the 1.618 expansion. And if I were to take an expansion of this one, here we go, and this one was 1.272. Here we go. So it's slightly different kind of a pattern formation, but it wasn't a 3 drives to a top pattern. This one, this pattern is slightly different there. Kind of looks like like a flying butterfly. So we haven't seen this kind of distribution here as of yet, but as we are reaching these levels, we'll just keep an eye on these. And the other reason I'm saying this is because a subscriber had asked me to take a look at the JPMorgan stock, and I did take a look at some really longer term cycles that are operating in this stock. And what we can see is this blue ABCD 1-to-1 price projection, which goes all the way from 2009. And if we just project it from the low which came in March of 2020, so the COVID lows, it also completes around the $204 per share level. And so the market is in that ballpark figure. There are smaller cycles, some of them are a little bit higher, just also because of its expansion. So I think $200 to $225, $25 range is a fairly broad range. We could see some trading range behavior appear in this stock. So this is what we'll be watching in JP Morgan. Okay, now let's take a look at the Bank of America. Here we go. This is Bank of America stock. It has done exactly what we were looking for. It has in fact met our target. We are watching for about $40 per share level, because that was the 61.8% retracement. Now look at these black ABCD 1-to-1 price projection, a blue ABCD. They all come together. So because we have a confluence of 2 price patterns and a Fibonacci ratio, it is a spot we should pay really close attention to. In fact, how you were looking at it, if you already had a position, you're shorter term oriented, maybe taking profits and getting out of the position would be something fine as well, or just running trailing stops for this one, because the chances are that the stock could go into a bit of a pullback. And if a pullback were to happen, this is the kind of pullback which we have seen the bigger one in this cycle. So it could pull back to around $36, and if that is to be broken, then we could actually be looking at a full 38.2% retracement of its entire lows from here to these recent highs. Now, assuming that these are the highs, right? It's not confirmed. So we could be looking at about $35 per share level as well. So that is one possibility. So I'm gonna remove this. Also remove this. Just have this move to about 35. There we go. So this is what we'll be watching in the stock of Bank of America. Now again, it's not a financial advice. You do whatever you have to do. I'm just some thoughts on this, just because it has reached the kind of pattern and the levels that we were watching for. Longer term, Bank of America is one of our favorite stocks because the longer term cycles working in this stock. I've done a video about it. You can find it on the channel. I'll try to put a link to it towards the end of this video, so you can forward and find that video towards the end of this current one. And I think you'll find it really good from an educational perspective. There's a lot of information about how the kind of cycles, the ABCD one-to-one price projections that we talk about, how they operate in different stocks, how you can identify them, and they can give you potential targets or ideas about a stock. Now let's take a look at Citigroup. Here we go. Citigroup right at the 61.8% retracement, and it's just not going anywhere. It's just taken it such a long time to get here, and this is one of these stocks which has not been a new all-time high. It was a top double top, double top, and here yeah, there's a potential that maybe it's also forming a 3 drives to a top pattern as well, but I don't see too much symmetry as of yet. But the stock is more likely to go in a trading range, and the 61.8% retracement could be a fairly strong resistance for this one. Again, it needs to be confirmed, because we ideally would like to see one of these swing points broken, so about $60 per share. If the price begins to move lower than that, then we could have some sort of a confirmation. But the 61.8% retracement is where you can see the stock has been there pretty much since April of this year. It's not able to take it out convincingly to move higher. So a pretty weak stock, and it's certainly much weaker than the broader market, such as the S&P 500, because the market is making new all-time highs, and this stock is has not made a new high since January of 2020, in fact. So there you go. And now let's take a look at the Morgan Stanley. This stock also in a bit of a trading range, but the chances are it might go and actually complete this gap here, which is identified in this gray zone, and we also have the black ABCD completing in this. So maybe it's gonna go and fill in this gap, and then from there we'll have to see whether it's able to, it's strong enough to form a new high. And if it is, then 120 could be the target, but the chances are it might find strong resistance within this box around here. And one thing is that we have an open gap here around the 65 level, which is coming from the December 2020. And if we see a failure of price here, maybe that gap could get closed. But really, we need to watch what is going to happen if the price gets into this to close this gap, whether it's strong enough to form a new highs, or it just rotates back into this trading range. It's been a pretty large trading range for this stock. Now, last but not least, let's take a look at the Wells Fargo. Now, the Wells Fargo is very interesting because it has moved into this zone that we had identified, and what this zone was is actually a gap. So the market had left a gap back in February of 2018, and this is the weekly chart. You can see that it took market these many years, but it has finally closed that gap, and it's just closed it by about 50%, and then it just pulled back right here. Now it's exhibiting a more of a trading range behavior, there is a possibility that it's able to actually take out these highs of 2018 and make a new all-time highs based on this purple ABCD. But getting above this gap which it filled is the real key. Whether the stock is strong enough to be able to do that remains to be seen. However, if we begin to see this swing around 55.40 being broken to the downside, that would indicate that maybe the stock is actually pushing lower and could move lower. Also because we'll have the 20 period weekly moving average being above the price, so maybe it could rotate a little bit lower and catch up with the 89 period moving average. So really key where the stock is, and the stock reached that on 13th of May, and it's just been in a trading range bound market now. So this is what we are watching in the key US financial stocks and ETFs. If you found our video of educational value, please do click the like button. And if you like the way we do the technical analysis using price projections, pattern recognition, Fibonacci retracements, projections, extensions and expansions, then please do subscribe to the channel and have a fantastic weekend. Speak to you guys soon. Have a great one.